Now, I think what's interesting is that when these tax deferred accounts were created, they were sold to all of us as this was a good thing. You get to defer paying the tax because then when you're in retirement, hypothetically, you should be in a lower tax bracket. And I think a lot of folks think, well, isn't that the case? Isn't my income going to be lower in retirement? So what would you say to someone who's of that school of thought?
You know, I would argue that it's a myth at this point. You know, it makes sense when you think about, oh yeah, my income would be less taxes. But from what we found with a lot of our clients, that's not the case. Genuinely, you get to that point like, well, golly, taxes are higher than they've ever been. And there's a number of reasons. Sometimes it's maybe you've been contributing into a work-related 401k plan for years. That's gone. Paying into health insurance, that's gone. Maybe you're on social or Medicare. Your write-offs get less. So generally, you're actually, in some instances, making more than you ever were because all those deductions are gone.
Right.
And then as we've talked about on previous shows, the ever-revolving, tax structure and tax rates from the government and the IRS, if that keeps creeping up as well. So it's a long way of saying that's not always the case. In most cases, people are paying a little bit more in taxes than they ever thought they would.